The latest Northern Bank quarterly sectoral forecast report shows that we have revised down our expectations for growth for 2011, and we've revised them down to 1.1% growth this year from 1.9% we had originally thought. Growth next year expected to come in at about 2%. We have also, though, estimated that the chances of the economy slipping back into recession, that is a double dip, would come in at about 15%, which is really not that high. There's a number of reasons behind that revision of our forecasts. In the first instance, the UK economy is flatlining, and that has implications for us. The austerity measures have had a huge impact on confidence, on both business confidence and on domestic confidence. And we've also now seen a sustained period where wages haven't grown, we've had no growth in wages, but disposable income is being squeezed quite heavily by the high inflation that we have to endure at the moment. Within that 1.1% growth, clearly there's some sectors that are performing very well, and then there'll be other sectors that are still struggling. Manufacturing is definitely the shining star in Northern Ireland at the moment. We see growth there of about 4.3% this year, which is really quite good, and that's a sector that has really tapped into the global recovery. Weak sterling is also helping to support it. Agriculture is also doing very well again, although they're suffering maybe a little bit from high input prices. There's also good trade going on in commodities and high demand for agricultural products, and again that's an exportable product, so it is doing very well, and one that Northern Ireland probably will focus a lot on in the future. Transport doing well, did well last year, held up, and about 2% growth this year expected for it, and also for hospitality, and probably the weak sterling again will help hospitality. We have quite high hopes for Northern Ireland to attract some Euro customers. It's very good value for money, and also some stay-at-home customers, they'll get good value for money too if they choose to holiday at home. Clearly within that there are some sectors that are still struggling. Construction, for example, still hasn't managed to benefit from things like the Green New Deal, so we see that contracting this year by about 2.9%, so no respite for that sector whatsoever. A couple of the public sector areas, public administration for example, we see that contracting back by about 1.4% this year, and actually education by 1.2%. And I wouldn't be too fearful around those contractions actually, because there's quite a bit of scope there. In summary, I suppose we have growth of 1.1%. It's not spectacular growth at this stage. We had anticipated it would be better, but we have big challenges. We have high inflation, high oil prices, and we have low confidence, and we also have to take on board all those austerity cuts that are about to happen. But there are opportunities, there's no doubt about it. There's opportunities there in terms of the global recovery, tapping into that, growing our private sector, and of course the one big opportunity is the corporation tax. And if we get that, things could be, and we could be in a very different place. So it is actually very important that most private companies actually do respond to that and take some ownership of where that consultation and how it develops and moves forward.